So good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome you all on this 4th of July Eve as we, well, David and I want to celebrate it. This is an Independence and Freedom edition of the Market Stock Talk. How you doing, David?
I'm doing great. What a week.
Yeah.
Crazy week.
Kind of surprise for a holiday shortened week, yeah?
Yeah, very much so. Very much so.
Let's see. There we go. I have to adjust everything. I run two screens while we're doing the webinar, guys, and so I might have one eye on one screen, one eye on the other. But yeah, David, this week in the market, after the support held last week and then the little bit of consolidation, then to see it move higher, I know that in holiday shortened weeks there's a tendency or a bias towards the upside, but I wasn't totally surprised, but it was interesting to see it move up as strongly as it did and keep this fairly steep uptrend in continuing through this week, don't you think?
Very much so, particularly Tuesday. I mean, the amount of buying and the volume that was behind it, I mean, was just shocking for a holiday week. I mean, that's something you typically see, the Monday after, a holiday week or something where they're going to, where everyone's back and they want to take it whatever direction they want to take it.
Yeah, exactly. So yeah. I want to remind everybody that this presentation is for, and our discussion is for training purposes only, and that David and I trade two different systems, but that if you're evaluating or going into a new system for the first time, please paper trade it first and get used to it before you risk your own personal capital. That's one thing I like about Thinkorswim. They have a wonderful paper trading platform that is very similar to actually placing the trades. So let's get into the market update for today. There's a typo up here at the front. This should be this 7/3/2014. This week we moved higher and we became more extended. We'll see that on the charts here shortly. The S&P moved higher, nearing overhead resistance of the trend channel. That's been in place for about the past year and a half to 2 years. The NASDAQ actually had a breakout above the high for this year, and now we're into territory that we haven't seen for the last 14 years. It's moving into territory where it was moving at nosebleed speed back in 2000. The Russell's pushing higher, but also at the resistance of the yearly high. It was very interesting, as I indicate here. The market acted, I definitely have to do my spell check better next time, it acted like a typical holiday shortened week, except we had a little bit more momentum to the upside. We always post where we were last week so you can see what we were talking about. And basically last week we were talking about that the S&P was in a trading range. It had been in a trading range for approximately 8 days. We got the breakout of that today. NASDAQ broke out to a new high and again in high territory. And then the Russell pushed higher with a very sloppy pattern last week. But this week we get nice breakouts and things move higher. Okay, we'll come back to this. Let's go look at the charts real quick. So here's the S&P. As we see, on a candlestick basis, the S&P bounced off the 8-day moving average after this hammer-like candle here. It is not an official hammer simply because it's not at the end of a downtrend. But we now have we have a trend inside of a trend. We have the all-time uptrend channel that we see, but we have this intermediate uptrend going on inside of that. We may push higher, but as long as this uptrend stays in effect, it may not try to come down and revisit the lower portion of the channel for a while. we could move up and push through this, then it would be even more extended, giving us probably more reason to actually go into a more significant sell-off to correction. What we may be seeing here, David, is actually the market setting itself up to go into the summer doldrums. I think we hit a high last year around the mid part of July, and then we sold off for a while, had a bounce late August, popped up, sold off in September, and then had a couple of bounces the rest of the year going into October, and then, of course, into November, where we finished the year fairly strongly last year. Moving ahead, the NASDAQ. There we go. As you can see from the chart here, we broke above this level at 4371. We had actually broken it last week, and now we just get further confirmation pushing prices up. But this is a very steep trajectory. Steep trajectories are typically very difficult to maintain. But the next levels of, I went back to 2000, and there's a resistance level that starts up here just outside of 4,500 and runs up to about 4,700. So that whole zone up there could, even though it was 14 years ago, it could act as a resistance level as prices do go higher. There goes the commuter train. On a weekly basis, a nice strong bullish candle breaking out. Again, nothing saying, hey, I'm ready to do some resting and turn back down yet. And so we'll be looking for those reversal candles going into next week and see if we actually get up into the 4,500 to 4,550 level, put in a reversal candle there for a potential pullback. As we can see, and one of the things I wanted to highlight to everybody, we were talking about extensions. We actually have extended now further. Give me my pencil. We have extended further from the 50-day moving average than we were at the beginning of last week. And every extension up is like at some point the momentum will start to wane. And the other thing that we have going on is, at least in the momentum, we're making new highs, but the actual momentum is not on the daily chart. On the weekly chart, yes, we did make a new high. So we get a little bit of conflicting information there. And let's go lastly to the Russell. Do you know if you type in the Russell backwards, it's TUR, and it actually comes up as a ETF for in Turkey. Do you know that, David?
I did not know that, but now I know.
I am just a wealth of just absolutely useless information. As we see with the Russell, what it's doing, it's pushing back up into the highs that it met earlier in the year, and it reached that on Wednesday, then sold off, put in a bearish Harami on Thursday, and that bearish Harami, one could consider that voided since we did break above it, but it still hasn't taken out this high from Wednesday. So the bearish Harami, I would say, would still remain in effect. Again, we may get, it has to break above that 1282 and sustain that. And we'll be looking for, again, it also has decreasing momentum on a daily basis, but on the weekly chart, you got a big spurt in momentum due to this price action. So any questions on the markets, guys? Okay, David, I am so glad. I did remember to hit the record button. For those of you who weren't with us, Active Trend Traders, we have a midweek market sanity check where we do some training. We do a little bit of market review and stock review every Wednesday night. And last night I get all the way to the end, and I look to stop the recording, and I had never started the recording. And so this morning I got to re-record about an hour's session and get that back out to our subscribers. So it was a lot of fun, Dave. Yeah. So are you ready to get going with your portions of this?
I am ready.
Okay. I'm switching it over to you. I am going on mute. Guys, if you do have any stocks you're going to want us to review later, please put the ticker symbol in, and whether you are in the stock and where you got into it, or if you're looking to get in, let us know that. It'll help us get to review more stocks. Go ahead, Dave.
Please do. We love talking about stocks, and we want to help. So yeah, bring them on. That's why we're here. So just a quick recap on what Dennis was saying. Yeah, short term, well overbought. The S&P's hitting some resistance. So is the Russell, and then I'm going to show you the Nasdaq in a minute. We started to see, even though the indexes were up this week, we started to see some leading stocks pull back. And that's good. We want to, for those of us that buy stocks on pullbacks to support, that's what we want to see, because they'll set up new lower entry points for us. We locked in $3,300 worth of gains in June. That's just what we closed out. We have still a few positions open with a lot more gains, but I don't like to talk about them until we actually lock them in. So. So far so good, and we're excited to see some leading stocks pull back now because they're going to set up new opportunities for us and set up a good July. As we get into the 4th of July weekend here, we want to talk a little bit about how you can use investing in stocks and trading stocks to become more financially independent and to make an improvement in life. And did you know that if you only make $500 a week, just $500 a week, I sound like a car salesman, but just go with me here. If you make just $500 a week, it's a nice return on any kind of portfolio. It's 104% on a 25% portfolio, a 52% return on a $50,000 portfolio, and a 26% return on a $100,000 portfolio. If you look at the prospectuses from most mutual funds, there are not many are doing annual returns like this, and this is just $500 a week. So it's one or two great trades a week. Get in, get a few points, get out, move on to the next bus. It's all you need to outperform 90% of Wall Street. It's really that simple, and that's why we're focused on taking profits. We want to find the good setups. We see the pattern, we take the trade, and then we don't get greedy. We take profits when we have them, and we move on to the next setup. And the market is like an ocean, wave after wave, setup after setup comes, and we just wait and take the wave. If you want to, Dennis did a nice thing last night on trend lines, and you can definitely, if you want to hold out for bigger gains, you can do that using trend lines and moving averages to manage the overall trend of a stock. There's definitely nothing wrong with that. It's just requires a little bit more patience and a good market, a consistently good market to do that. So so for us, it's just look at the patterns, understand the patterns, what we need to see to take the trade, and then take our profits and move on. Wash, rinse, repeat. Just keep doing it over and over again, and you can see what that can do. So that all said, we'll go back into what are the patterns that we look for. We look for uptrend patterns, downtrend patterns, and change in trend patterns. And right now, all the action remains on the uptrend side, although it's it's not as fruitful right now because the market and most stocks are so extended. So we do need to see some pullback to set up some new opportunities, but we certainly had our fair share of opportunities in May and June, and we were rewarded nicely for them. So there's two common uptrend patterns: pullback off highs, stocks that are in confirmed uptrends above the 50-day moving average that are pulling back in an orderly manner towards support. And Kate Spade is a good example of that. You can see we have a confirmed uptrend here, a nice trend channel. and it's pulling back off the highs of that channel towards areas of support here, lateral support. We also have the trend channel support, and then not too far behind it we have the 50-day moving average. We love pullbacks to areas where there's more than one area of support, because that tends to hold. So all we need to see here is a break above the pink line for to trigger our long side trade. The other uptrending pattern is what we call right side of a cup crossover. This is more of when a stock forms a more solid base, not necessarily been in an uptrend, but it's formed a more regular base, so a left side of a cup, a bottom of a cup, and then the right side of a cup. We want to catch this this stock. This vlog is a perfect example. You have the left side here, the bottom here, the green line. That was the break off of the bottom of the cup to build the right side here, and that's where we initiated our trade. And this is from last week, but I just wanted to keep it there to show you how big that move was. I mean, 25 to 32 in a little over 2 weeks was really nice. So Tesla did that as well a couple weeks ago. It broke above the blue line here, and now it's just trading in an overall channel, kind of like what Kate Spade looked like. And so, it's been pulling back this week, and oh geez, why is Tesla pulling back? It's supposed to be building the right side of a cup. Well, you can see, because it's at trend channel resistance, and now it's getting pretty close to multiple areas of support here, where it should rebound as long as this trend's going to stay intact. So we're just kind of, what we did, we took the trade on the break of the pink line here, and we sold it. We sold half of our position, and then we still have the other half that we're hanging on to, and we're going to add to as it continues its pullback here to support. So that's another way to do things too. If you you can kind of have the best of both worlds. You can take profits after a few points, and only take half profits, and then manage the overall trend and keep adding back to it as it hits support over and over again. That's definitely a very good strategy as well. And I think next week we'll do an article about that, comparing the different strategies. So I just didn't have a chance to get around to it this week. So anyway, so what are we going to do now? We're just going to let stocks continue to pull back, and we'd love to see the indexes pull back as well. Leading stocks typically lead the market up and down, so we're seeing some stocks start to pull back even though the indexes are still going up. That's very typical, and they're probably going to be the first stocks to start rebounding when the market's still consolidating. So that's just typically how it works. And the pullbacks, they're necessary. They're not fun to sit through if you have positions, but they're necessary, because the market works like a bunny hop dance: 2 steps forward, or 2 hops forward, 1 hop back. Then in the long run you get to where you're going, and that's how it works. It's healthy, it's constructive. It's just, if it just goes straight up every single day, you're leaving yourself vulnerable to a sharper pullback. So these are necessary, and when they happen, we love it because it resets the pins, and we can go for strikes again like we did in May and June. So we are really looking forward to that, and that's about it. I mean, pretty much we like what we see here. So give us a call. That's my direct number. Send us an email. We'd love hearing from folks, and we'll take your questions. And we have a 15-day free trial, so you can see every stock that's on our watch list, all of our current positions. You get everything our paying subscribers get for free for 15 days. And then we also, Dennis and I, have a combination subscription. If you want to subscribe to both of our services, to do that on your own, it would be $100. But we do have a marketstocktalk.com website you can go to, and you can get both of our services for $49.99. So that's a really, really great deal. We also have a couple bonus articles. Since I talked about the $500 a week, I have an article that I'll send to you, how to outperform 90% of Wall Street with just $500 a week. And then Dennis has a really good special report on bounces or breakouts, and it's very, very good. So really encourage you to take a look at this. I mean, for $50, given the performance of both of our services the past month, I mean, it's you paid for multiple years of both services, with that. So that's about all I have, Dennis.
Hey, David, thank you. And I wanted to remind everybody that 15-day free offer that you mentioned at the very beginning. That's for the regular subscription to All About Trends. We don't offer that on the joint or the combo subscription because it's a good deal. I mean,
yeah, it's such a deal. Yeah, we can't really do much more than that.
And so, David, you have a question from David, who's one of your subscribers, and he asked a question. He says, basically, why was there no alert on MasterCard as it broke the diagonal?
Yeah, well, sometimes that happens where we get into a situation where we can't do them all, and we just have so many other positions we're watching or stocks on our watch list, and it's we just, by the time we get around to getting the alert out and going through all the logistics of it, sometimes we can't do them all. So what we say is, there's two ways to work with us. One is to literally trade in tandem with us via the alerts. The other is to, do it yourself as well, and and take those trades as a trigger. We have many subscribers that do that. It's difficult to, when you're running a service and you've got multiple subscribers, to get to every single trade, and I hope you can understand that. But it doesn't mean you can't go out and do them on your own.
Yeah. Oh no, Dave. That I understand. I definitely do understand totally, because it's the old adage that I'm sorry, that was from Jonathan, not from David. So it's like the old adage, you can't kiss all the babies. Mm-hmm. And the thing about it is I provide my private watch list for our subscribers, and I had several subscribers this week catch a couple of really great trades. One of them was in Jazz, one of them was in the other one. And then also, my portfolio is just about full, with exception, because I only run a portfolio of like four stocks and one ETF, which is TNA. And I do that specifically for the people who, as you said, were trading in tandem with me, because I'm trying to provide a very focused, manageable portfolio for the guys and men and women who still work for a living. And watching a huge portfolio of 10 or more stocks that you have a position in can be very daunting for somebody who has a 9-to-5 job or more than that. I mean, is there even such a thing as a 9-to-5 job anymore? And so that's why. Anyway, looks like
believe me, we'd love to do them all, because that would be another great trade that we could be talking about and marketing and doing all kinds of things with. But it just is what it is. I mean, sometimes you get a situation where something breaks and don't blink format, and before you know it, it's already long gone. So
yep,
it's what it is.
And I love the way that Dave talks about the All About Trend system. With the active trend trading system, basically we through our alert systems and our trade management emails that we send out, we show our subscribers what to trade. And I have my own private list that I send out. That's some of the best growth stocks around. When to enter, entry action points, when to exit, what strategies we're using to minimize risk and maximize profit. And then also on our website we have a tab where you can go and look at the expectations and see what's happened in the past with the system.
Right, and just because we don't do a trade alert on it doesn't mean it's it's bad, and you can't do the trade. It's just literally a logistics thing. That's it.
So, it looks like, David, here's a post on where we finished June at, and then the spreadsheet down below is what we have currently going in July. We did close, Dave, I do a lot of the, basically every trade that we do is split between what I call an income generating trade, and we had one that closed this week on Qihoo, and it generated $8.38 per share, and we had 100 shares that we closed out, so we had generated income of $838, and then the rest of the positions down there for the capital building portion, I use, we're pyramided into our longer term positions on those, and that shows where we're at with that, but I do not report any other than just this spreadsheet. I don't even post this on the, I don't count the 2942 in paper profits until it's actually, as David says, either in the bank or off the table.
Exactly. We don't do that as well, and nor do we spend a lot of time talking about trades that we feature that we didn't issue an alert on because, you know, we didn't do it, and we don't, you know, that's just an integrity issue, I guess, for us.
Yeah, me too. So July, we have moved into our premium service, and just for a lot of people who don't know what Active Trend Trading System is about, but we developed it to equip traders who of all basically skill levels, who are actually working for a living, and for a system that works well in any type of market condition. You can see what's offered in the premium and the basic subscription here. I also post to you can go and look at a recording of this webinar on Market Tech Talk. That's a channel, and there's also a button there in the panel at the front. If you do want to take advantage of this subscription, the combo deal, you can hit the button here and it'll take you away to that. If you do like some of the videos that are there, because I also have tech tips, yeah, please feel free to leave me a little, you know, let me know you like it and like it. David and I would both appreciate if just everybody would just, you know, share the Market Stock Talk show that both of us co-host with your friends. If you're getting something out of it, you know, please let them know. Although I understand some of my friends don't understand what I do for a living. You know, they go, "Oh, you're a day trader." No, I'm not a day trader, but it's like it's gotten to the point in time that I don't even try to explain it to people anymore. I just say I'm a technical analyst, and that's what I do in the stock market. But they're starting to get the idea. And lastly, both David and I want you guys to have a great 4th of July. David, did I correct your phone number?
That looks perfect.
Okay, excellent.
That one will work.
So that's it for the main part of this, and we'll be glad to hang around and look at any stocks you want us to look at. David, it's always a pleasure. I'm glad you're back in California.
Yep, me too. Me too.
Have a great time with your kids and your wife over this 4th of July holiday. Those of you that come to the Bay Area Moneymakers on Saturday, we'll see you there. And with that, remember to trade wisely and trade